Hello there, this is Adam Woods with the weekly Forex Outlook for week of the 4th of the 8th, 2014. We're going to go through the economic calendar here, look at the high impact alerts, and just take a look and see which ones I'm trading and why. Okay, so the first day we've got is Monday. We've got the retail sales on the Aussie dollar. Now, this is expected to be better than previous. But this week we do have the RBA rate statement and cash rate coming out on Tuesday morning. I'm expecting the RBA to have a little bit more of a dovish tone. The data hasn't been that brilliant on the Aussie dollar recently, and although this retail sales is expected to be better than previous, I am just looking for a spike up and then an entry into the sell trade. Okay, so you can see the chart in front of me here at the moment. You can see we had dropped below the 9,300 level, which is quite a significant support level. And then we had a spike back up from the non-farm payroll on Friday. I'm expecting this probably to spike back up to around about the same sort of price. You can see there that we've got a nice level support area about the 9,330 level. So this is possibly going to be my entry point for that alert at 2:30 AM on Monday. Now, where the market opens on Sunday evening, I'll take a look at that. If there's enough room there to set a pending order, then that's what I'll be looking to do. Okay, so that's the Aussie dollar. The next one that we've got out on the calendar is going to be on 9:30 AM on the same day, on Monday. We've got the construction PMI on the pound. Now, recently the pound hasn't been having that good of data. Although I am still bullish on sterling, I do believe that it is a strong currency. And I do believe it will eventually pull back up to 175, okay, when we get closer to the interest rate hike in 2015 that it looks like it's going to be at the moment. I am looking for the pound to pull back at the moment. It's coming close to its first area of support, which is the 16800 level. But I do think we will probably get it to come back down to 16750, possibly even 16700. Okay, so that's where I'm going to be looking to buy this. So at the moment, it's still tradable as a sentiment trade, trading it down to those numbers, but I would be trading it down with caution. It could pull back at any time. So keep an eye on the construction PMI. I'm not actually going to look to trade this. I'm just going to have a look to see what the data comes out like, see if it is worse than previous, which is what it's forecasted to be. But if it is slightly better, then this is where we could start to see this pound turning around from this drop that we've had. So just watching that one at the moment. Okay, then on Tuesday we're back to the Aussie dollar. Okay, we've got the trade balance at 2:30 AM, and we've also got the cash rate and the RBA rate statement at 5:30. Now, like I said before, I am expecting the Aussie dollar to have a slightly more dovish tone. Their unemployment isn't improving as it should be. I do think that the RBA, they may even possibly go as far as talking about cutting rates, okay, cutting interest rates. If that happens, we're going to see this drop very, very quickly to 9.2. Okay, so I do want to be in there before that, and I'm hoping I'm going to be able to get in there on that spike up on the Monday morning, and then be able to ride this trade balance at 2:30 and this cash rate statement and RBA rate statement on August the 5th at 5:30 AM. Okay, so looking to get into that on Monday. Next one we're looking at again is back to the pound, and it's the services PMI. Now, this one is actually expected to come out better than previous. Okay, so this is where we could again start to see that data pull back, start to pull this pound back up to the 17,000 level. But like I said, first I do expect it to have a little bit more of a drop. It depends where it is by Tuesday to whether I take the buy on this or not. But if it is round about the 16750, I would definitely looking for buys before that services PMI comes out at 9:30. If we're still above the 16800 level, then I will possibly wait and just see how that data comes out. Okay. Okay. The next one is at 3 PM, and it's the US dollar ISM non-manufacturing PMI. Okay, so the US dollar was driving the markets quite a lot last week. There was a lot of strength in the US dollar, and that saw a lot of these currency pairs move down: the Aussie, the Euro, the pound especially. After that non-farm payroll and the statement from the FOMC on Wednesday, which was a little bit neutral in comparison to what traders thought it was going to be. They thought it was going to be a little bit more hawkish. I think what we're going to see from the US dollar is it's starting to move back a little bit towards being a bit of a neutral currency. Okay, not for the long term, but certainly for the short and for the mid term, I think we're going to see that US dollar just be a little bit of a neutral currency. Okay, so I'm not really looking to trade that at 3 p.m. on Tuesday. I will be looking for it to maybe to support the trades that I'm already in. It is expected to come out better than previous, which could help pull that Aussie down a little bit further, but it wouldn't work well for our pound. So we're just going to keep an eye on that and see how that data comes out. Like I said, I think they'll be short-lived anyway. There'll just be spikes in the direction, and then it'll pull back to the natural price. 11.45, we've got the New Zealand dollar. Now this is an important one. Already in the New Zealand dollar from last week. I made it a priority to get into that. Maybe even got into that a little bit early. We got in just on this baseline around about 8.487 for a buy. Okay, we had a big drop on the bad milk powder exports information last week, but the New Zealand dollar, they have raised their interest rates, and this should pull back up to its fair price around about 8.788. So I'm looking for a decent up move here, and the first thing that we're going to get is the unemployment rate expected to drop to 5.8 from 6%, and the unemployment change is expected to drop quarter on quarter from 0.9 to 0.7. So we could well see this start to hike back up. Okay, so that's what I'm looking for. Like I said, already in this trade, but you can buy into this anywhere between 8.5, 8.450, 8.350. Okay, so that is on Tuesday. Wednesday, again, we've got back to pound data. We've got the manufacturing production month on month, high impact alert. It is expected to be better than previous. So this is two lots of data now that are going to come out on the run that's expected to be better than previous. So this, we could start to see that pound turn around. So again, looking for that pullback to the sort of 168s, 16750s, 16700s from prior alerts, and hopefully be able to get in, or hopefully already be in this for those spikes up. At 1:30 on the same day on Wednesday, we've got Canadian trade balance and the US dollar trade balance. Okay, now the Canadian at the moment, the market has caught up with the monetary policy from the US dollar Canadian, and it has started to weaken the Canadian currency, certainly against the US, with that strength in the US last week. But I do feel we're going to have a bit of a cap here at the 109.50 level. Okay, now as you can see on my chart here, I've got Fibonacci drawn on there, because even if the US dollar does continue to strengthen against the Canadian, I do believe we're going to get a 50% pullback on the trend that we've had, this up move that we had last week. Okay, it has come up against a resistance level at 109. We did get a good GDP from the BOC last week. So any more good data from the CAD, i.e. if we get a good trade balance, which is expected to be better than previous, then we could get that 50% retracement. So I'm looking to actually trade that sentiment down to that 50% retracement, and then possibly taking buys again at 108.27, depending on the data. We've got the US dollar data out at the same time, their trade balance as well. That is expected to be slightly better than previous. So it's a bit of a contrast here, so just be aware of that. But overall, still looking to trade that down to the 50% retracement level. Okay, moving into Thursday, quite a big week for the Aussie dollar. We're back onto the Aussie dollar again. We've got employment change and unemployment rate. The unemployment change is expected to drop slightly. The unemployment rate is expected to stay the same. Now, if the unemployment rate raises, which it may possibly do, I've got a slight inkling that we might come in at 6.1%. If not, I think it will remain the same at 6%. But if it comes in at 6.1%, a slight hike in unemployment, then we're going to see this Aussie dollar drop right down to that 9.250 level. It may even suppress that 9.2 and hit 9.150, 9.1. However, if it does stay the same at 6%, or if it drops slightly, then again, this Aussie could start to change tack, and we could start to see it pull back up. I do still believe that we've got a cap there at 9.5. Okay, so it could be looking for sales at that position. But first of all, I think we need to get down to this 9.2. I think that's going to happen before Thursday, and if it does happen before Thursday and we get a good unemployment rate, then I will buy that back. Okay, Thursday onto the pound. We've got the MPC rate and the official bank rate on the pound on Thursday, so this is a big one for the pound. Okay, so now again, we have had a bit of a mixed emotions on the pound recently. We had the MPC vote out last week, which was unanimous to keep interest rates the same. So what we'll be looking for from the official bank rate and MPC's rate statement is the official bank rate is going to remain the same, I think. So I don't think we're going to get too much of a movement immediately off the pound. The asset purchase facility is expected to remain the same. What we want to do is we want to listen to that MPC rate statement and listen to what they've got to say. If they start talking about interest rates hiking early, which I don't think they are, then we're going to see this pound shoot up. But what we want to hear is that the slack in the economy is being taken up, that the pound is still strong, that we still are on for an interest rate hike in 2015. What we don't want to hear is them mentioning anything about a neutral tone and keeping rates the same throughout 2015. If they start talking about keeping rates the same throughout 2015, then we could well see this pound drop a lot more, okay? But we're hoping to be in there for buys before that, and we're hoping the news is going to come out in favour of a strong sterling. We've also got at 12.45 on the euro, we've got the minimum bid rate. Now the ECB haven't really been doing enough to strengthen the eurozone economy at the moment. They are having problems. The data's coming out mixed. Some of it's good, some of it's poor. It's poor, especially on Germany. Minimum bid rate. There is been a bit of chatter and a bit of rumour that the euro may possibly be heading into deflation. If that's the case, then the euro are going to have to do something. Okay, we've got the press conference at 1:30, and we're going to be listening very closely to what Mario Draghi has to say. See if he indicates any more QE into the EC, into the eurozone. If that's the case, then I think we're going to see this euro drop to 131, which is quite a big drop. If, however, they're going to keep rates the same, they're not going to talk about any more QE. I do think that with the US dollar not coming through with the results on Friday from the non-farm payroll, that people may start to buy this euro back up to 138. Okay, I do think it will have a cap at 138, but it could well be bought back up to there, depending on what comes out of the ECB on Thursday next week. We've also got Canadian dollar building permits at 130. Not really interested in that at all. And the unemployment claims from the US dollar at 130 as well. Again, not looking particularly to trade that. IVPMI from the CAD as well. This is supposed to be expected a little bit stronger than previous. Hopefully we'll already be in that CAD trade for a sell, and that will just strengthen our profits there. Moving through to Friday. Again, looking at the Aussie dollar, we've got the RBA monetary policy statement. This is going to be important. We're going to have to listen to what they've got to say. It will make a decision on depending on what price we are, whether we remain in the trade for a sell or whether we start to get out and turn this trade around for a buy. Okay, we've also got the monetary policy statement on the Japanese yen. The US dollar Japanese yen has been strengthening the US dollar against the yen at the moment, but it did have a considerable pullback after the non-farm payroll on Friday. What we want to hear from the BOJ is that they are continuing with their QE program, which I think is what we will hear, and that there isn't any plans to taper in 2015. As long as we get that information coming from the BOJ, then we should still see that US dollar Japanese yen rally, and we're looking for that to come up to the fair price of 105. So we've got quite a distance to come, and in fact taking buys at the level of 102.50 all the way down to 102.25 is probably the best option at the moment. Okay, so that's basically all of the high impact alerts. We've got the Canadian dollar, unemployment change on Friday as well. The unemployment rate is expected to drop. Again, just strengthening hopefully the trade that we're already in on the Canadian, okay, which is to drop down to 108.27. Okay, thanks very much for listening, and I hope you manage to make some pips next week.